One stock that is in focus today is Asian Paints. Asian Paints came out with its Q1 FY25 results yesterday. The results have not been in line with the estimates. Revenue down around 2% despite the domestic decorative volume growth of 7%. Revenue drop was basically led by adverse product mix and impact of price cuts which were taken. And of course, EBITDA and PAT was impacted by higher employee cost and OPEX. However, to discuss this further, we are today joined by Mr. Amit Syngle, who is the MD and CEO at Asian Paints. Welcome to the show, sir. My first question to you is that, give us some color as to, why overall margins have been down. The PAT has also been impacted. And do you expect this to continue going forward for the other 3 quarters of FY25, or do you see some improvement in margins?
So overall, when we look at the quarter in terms of the way it has gone, it has been tough. The market conditions have been definitely on a slower side to the extent they got impacted by overall the elections in terms of what they were going and also the heat waves in terms of what we could see in the market. However, I think the month of June has been much better in terms of what we have seen, both from the point of view of the uptick in the rural demand in terms of what we have seen, as well as from the point of view of B2B sales and industrial sales to that extent. So I think we've registered a 7% overall volume growth which has come in. The value growths have been lower. The industrial growths are relatively much better as compared to the retail deco growths in terms of what we have seen. But going forward, what we are definitely seeing is that there is an uptake in terms of the rural demand. The monsoon progression has been good. There is an improvement in the market sentiment, definitely in terms of what we are seeing to that extent. And also we have a big festive season coming ahead. So I think all these factors are looking at that the demand will definitely get augmented. The government spending has also now gone up post the election, and we are looking forward to the budget as well overall. So I think these factors are looking to kind of augment the sales. We definitely want to kind of get to larger double-digit volume growths in terms of overall what has been the trend with Asian Paints for the past few years, and that is something which we want to kind of visit. Our overall margins have been definitely, as we have said, the 18 to 20% PBTIT margins band is something which we have already always spoken about, and we will definitely see that we maintain that band as we kind of go forward in the year as well.
Right. Okay. Understood. And Mr. Syngle, in your con call yesterday, you did mention that the raw material inflationary expected to be around 1.5 in Q2. I want to understand that you also mentioned that because of that you might see some kind of price hikes going forward. Can you quantify that price hike for us? And secondly, this will just be in Q2, or do you expect the same in Q3 and Q4 as well?
So first of all, I think a 1.8% inflation in Q1 was unprecedented. We never thought that this kind of inflation would kind of come into that extent. We are seeing a lot of disruptions because of the whole activities which are happening across the Red Sea. We have seen overall ocean freights kind of increase, which has contributed to part of the inflation, and we expect that to continue in Q2 to that extent. The second area is that with respect to certain monomers, which is a key constituent in terms of our raw materials, we are seeing price hikes happening both from the point of view of procurement, freights, and so on and so forth, which has kind of resulted in the crude has been also in general inflationary in terms of what has been overall seen to that extent. And some of these parameters, given the fact that the material cost in the paint industry is fairly sensitive to inflation, has overall contributed in terms of us taking a 1% increase in terms of what we have already taken. And if this trend continues in Q2, which is what we are expecting to be another 1.5% or so, I think we would be kind of really forced to take further price increases as well as we kind of see the Q2.
Understood. Also, on the competitive side of things, Mr. Syngle, I'm sure you've got this question a lot of times now. Birla Opus has entered with a huge capex, and they aspire to be the second largest paint company in India. Do you see this affecting the overall demand for Asian Paints as well as the entire paint sector?
See, overall, for any industry, I think competition is always good. And I think it only stirs more innovation, more ways of kind of working and really kind of progression for the market to that extent. However, what we are seeing is that definitely all the new competition which has come into that extent, and not only the organization you mentioned. I think what we are seeing is that overall for the large paint industry, which is almost about 80,000 crores, their overall contribution to the thing is not appearing more than about 1.5 to 2% overall to that extent, and therefore it will definitely take for time for them to settle in and start really looking at delivering and impacting the paint industry. So I really do not think that currently it would kind of affect any dynamics amongst the top 4 5 players there are which are there. Some of the unorganized sectors, some of the smaller players definitely might feel a little bit impact overall to that extent, but the larger configuration of the market is not showing any change in terms of going forward to that extent. So I don't think so it is doing anything in terms of disrupting the market, but definitely I think competition coming is good because it kind of gives us more fodder for thought and what we can do in terms of really energizing the market and the consumer.
Absolutely, I get your point, but they've also their products are launched at a discounted price of almost 5 to 6% as compared to Asian Paints also. So, but do you see that from a longer term perspective, from a market penetration point of view, this will affect the demand overall?
See, actually, Asian Paints has been always selling overall their products at a certain price premium to competition to that extent, and that is why we feel that the Asian Paints consumer is used to a certain quality, a certain assurance, a certain differentiation in a product in terms of what we see, what they see overall to that extent, and therefore the consumer is willing to pay that price for that extra assurance, quality, and the differentiation in terms of what they get in terms of the product. So overall, when there is new competition which comes, everyone will kind of offer more discounts and try to give a better pricing in terms of anything. And we think that just a pure play pricing strategy of placing your products 5% 5 to 7% lower or giving higher discounts in the market is not the only strategy which works in terms of really establishing yourself in terms of going forward. And therefore, we feel that the whole area of how consumers perceive you, what is the disposition of the customer to buy into the brand, and the fact that the dealer is looking at a certain ROI, I think all these are important factors to really galvanize a brand in the market. And that is something that Asian Paints is always kind of looking forward to consolidate and strengthen as we go forward in the market.
Understood, Mr. Singhal. Well, from the business side of things, new products have contributed almost 12% to your top line, right? Do you expect this percentage to increase from that 12%? Because I believe that these will be more margin accretive.
Yes, so overall, we have been able to launch a huge number of products in the last about 5 years. More than 250 new products is something which we have launched because innovation is the key growth engine in terms of what we take in the overall Asian Paints journey as we kind of go ahead. Our endeavor is that we can definitely take this 12% to about 13 to 14% as we kind of go ahead in terms of contribution to the revenue. And we are looking at more and more differentiated products, more premium products which are going to come in the market, which can really galvanize the demand. And we're pretty hopeful that as we kind of go ahead, we will be able to kind of really take these percentages up.
Right, understood. So then do you expect that your margins can go higher than that 20% mark?
So overall, I think the margins are a combination of lot many areas in terms of what comes in. There are large segments in the market which are kind of distributed across the economy, premium and luxury markets to that extent. We take a balanced growth in terms of that we need to kind of really keep on focusing in all the segments. For instance, we have launched a huge product called Neo Bharat in the bottom of the pyramid segment, and it has done extremely well for us in the last about 3 months to that extent. So I think the margins are a function of a balanced growth strategy in terms of what we would kind of take in each of the segments. And therefore, currently, we would kind of really want to maintain this band in terms of as a guidance in terms of what we have given.
Okay, understood, Mr. Singhal. One last quick question. You know, your overall capacity stands at around 22 lakh kiloliters right now. Do you plan any further capex and capacity expansions in FY25?
So I think 2 years back we had announced about a capex of about 8,700 crores overall. So currently we have possibly working in that capex only. We have our Mysore factory, which has now doubled in terms of the overall capacity from 3 lakh KL to about 6 lakh KL to that extent. We are also announced a new plant in MP in Indore to that extent, which would augment the capacity by another 4 lakh tons in the next 2 to 3 years to that extent. And we have other brownfield ventures which are going with respect to our Ankleshwar plant and so on and so forth. So I think given the overall India growth story, we are definitely increasing our capacity going forward, and we are looking at also investing in backward integration. We've announced our white cement plant, which is coming in Dubai, a VAM-BAE plant, which is coming in Gujarat, in Dahej. So I think lots of overall capex announcements we've already done, and we are underway in terms of really accomplishing those kind of announcements on the capex front in terms of what we have done.
Got it. Well, Mr. Singhal, thank you so much for giving us those insights on Asian Paints, and all the best for the upcoming quarters. And thank you so much for taking your time and speaking with us at NDTV Profit.